What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. And don't forget to drop a like because this is just one of your favorite channels or you like the information provided. Nonetheless, let's talk about what's currently going on. So, as you've noticed, I've included a weekly recap as it's important to know what's going on moving forward. Again, my sentiments of the whole market and the battle on inflation, I think, is going to it's obviously going to continue. Inflation is showing big signs of reduction, which is great. Um, but I think the pace in which it's coming down is still something the Fed is going to fight. Now, being said, I think that has been overshadowed by the current banking crisis, at least for the next couple of weeks, because this story, it's been about roughly almost 2 weeks now that SVB has essentially gone under. We've also lost Credit Suisse. We've lost Silvergate as well. We've lost a couple other banks, Signature. So there's been a lot of news, and this week is no different. The biggest takeaway to understand coming into this week was going to be, or this past week was going to be, what the interest rates were, as essentially this was going to set the stage for upcoming months. Now, being said, as far as the news front on banks, there's been a lot of stuff going on behind the scenes. A lot of the bigger or banks have been kind of low key over this past week. There was a lot of stuff, a lot of talk, but and I've highlighted some of the stuff here. But nonetheless, it's been a very interesting week nonetheless. So let's go ahead and start off with the main topic of the week was what was the rates and the monetary policy going to be for this week that it kicked off on Wednesday. The market pushed up quite a bit going into that as people are trying to time a pivot again, which I think is going could be a really bad thing, especially with what's currently going on. And so coming into this rate, I believe it was sitting at 85% chance that we'd get a 25-point basis move. And that's what we got this week. So we are now sitting at 4.75 to 5% on interest rates. With that being said, um, essentially, the interest rates came out, projections have come out. Powell was pretty much he started off really dovish, then kind of went really hawkish to an extent, and they removed some stuff from the report that was extremely important, as in continued rate increases was removed off the report. But also understand it's more so highlighted that now they are that something is broken. They have to be very careful on whether they're going to continue to raise rates or stop or pause. Now, that was a very small percentage of an actual pause. And Powell had mentioned that a pause was talked about. But with that even being said, um, obviously a 25-point basis move was needed. Interest rates are still at 6%, or not interest rates, but inflation still at 6%. So it's still extremely high. It's not, again, coming down quick enough. The demand is still, from what the numbers are showing, is still very much there, even though some of the other numbers would suggest that people are still hurting extremely bad. But debt is again at an all-time high, and the monthly debt carried over is extremely high as well. So, being said, a 25-point basis move was, I think, necessary at least for this particular thing, whether that's to save face or whatever the case is. But what we have to understand is that we got 25 points. Now, there's still a strong projection that we're going to get a potential another 25 on the next meeting. There's talk about a pause. That again is going to fluctuate. That's why I'm not going to really kind of talk about that, because any news article is going to make that fluctuate, especially right now. We're very sensitive in this banking crisis that we're currently going in. And something I've already stated in my videos, I've been kind of capturing this whole banking crisis currently going on, and what we're in. And very something that I like to highlight this week is essentially that you've had Biden come on, our banking system is safe. Yellen come on, U.S. banking system is sound. And then Powell coming on saying banking system is strong. One thing I've noticed this week is you had a lot of testimony from Yellen, and then you obviously had Powell speaking after monetary policy. He came out and essentially said that, which was funny, he said all depositors essentially are safe or will be okay. And then he had Yellen saying that it's only going to be selective banks, because again, they don't have, even though you can print the money, you still only have so much, right? You have the debt ceiling that's around the corner. Um, and you also have CBDCs coming in July, or going active in July. So there's a lot going on there. But to kind of get into the banking stuff now, that's pretty much what we have for the interest rates. Our next interest rates aren't until, I thought it was May, but it is actually June. So we have a very, very long time for the next monetary policy. But I think what's going to happen is it's going to be an emergency rate increase, emergency rate decrease, or pause, whatever the case is. I think is really dependent on what happens with the banks. And so that's why it was critical to at least get a 25-point basis move off of this one. So that way they can, if they need to adjust, they can adjust better at that time. Again, they found the weak spot and where banks are starting to suffer, but I think they want a little bit more pain. Powell said this before. We're going to see a lot more pain before things get better. And I think we need to see more pain for things to break enough for them to actually start decreasing rates. Now, one thing that was interesting coming out of the this particular rate increase is, he was also asked if there would be rate decreases this year, as they were already projecting rate decreases. I think they were projecting like 4 different rate decreases. And then Powell said, no, baseline is essentially going to be a pause till the end of the year. Essentially, in my opinion, what he really means by that is he's waiting for more banks to break. And more banks break, then it'll get to the point to where they'll have to pause sooner, and then potentially start decreasing rates. Again, to decrease rates, you need a big catastrophic event. We haven't quite seen that. We're right on the cusp of that, but we haven't quite seen it enough for Powell to start laying off rates. And so the market has kind of been anticipating that to happen. So the market's been holding them out despite all what's currently going on. It is still fighting essentially to time a pivot. And so, again, the last time this happened, we keep doing this every single time, and we keep crashing every single time. So, but this is bigger. You have a bank crisis going on now. So, let me go over the bank crisis, and then I'll give you my idea of what I'm thinking and what could potentially be happening here. So, the banking crisis, we had the ECB 50-point basis move. We had Credit Suisse Bank 50-point basis move, Federal Reserve 25, Bank of England 25. Some big reductions, right? First Republic negative 89%, Pac West negative 64%. This is all stock prices have fallen. Western Alliance 55%. First in this week highlighted a lot of talks about major problems still with First Republic, Credit Suisse, their continued fallout. Deutsche Bank shares slumped more than 10% on credit default swaps. Capital One was also having a lot of activity on credit default swaps as well. This is something interesting about crypto as well. Kraken suspended deposits and withdrawals, and then Coin had received Wells Fargo notice from SEC. Block also was getting nailed as well, and they're actually trying to fight it. A lot of these different things that came out from SEC this week on crypto side was interesting because of the fact that a lot of these corporations came back and tried to hit back like, this is ridiculous. Like, when we filed this paperwork, all that information was already on there. So it's very interesting the way everything kind of rolled out. That was all Thursday morning or Wednesday evening into Thursday, I believe, that happened. Um, but crypto is getting interesting. Again, the talks of potential on ramps having to close down the crypto side until the Fed can wrap around how they're going to essentially roll out the CBDCs. So we'll see what happens there. But the top 25 U.S. banks rose to 10.4 trillion, and deposits at small U.S. banks fell to 5.46 trillion. And this past week, from last week's 5.8 trillion, that has also fallen. So that is what's interesting. And then, like I stated before, Biden, Yellen, and Powell saying everything is safe. And I don't know how many times it seemed like Yellen was on like every other day, if not every day, saying banks are safe, banks are safe. So nonetheless, the last time they said this, everything crumbled. So, for this week, again, there's not going to be tons of events. We are setting back up for another earnings mode here. We have to remember that the middle of April will be earnings mode. So that we're going to start getting into that. That could be why the market is holding as of right now. But again, if any kind of news pops off, you have to guarantee that things are going to get really nasty really fast, I think. So again, in the exposure, right? The exposure, essentially how this is going to happen is the people that are exposed from SVB, Credit Suisse, right? That information is just like slowly starting to leak out of who's been exposed and what's actually happening, or the fallout of that. And it's going to take weeks for the full fallout of these banks going underwater and failing. And then if you get multiple more banks, that's more people getting laid off, that's more businesses affected. You have to understand that there's a huger butterfly effect that happens when these banks start failing. And so I think the gravity again of the situation isn't really realized there just yet, and something I talked about the utopic perspective versus the reality of the situation. It takes a while for that to play out, but that's what we are seeing right now. So this week we don't have a lot going on. We have the core PCE on Friday, and then upcoming events, monetary policy until June. Core inflation is on the 12th. Now, what's important about the core inflation here is if for some reason inflation gets sticky again, or isn't again not dropping if it stays around high fives, it's going to be a problem. Again, leading to the fact that what might happen is the Fed might have to come in with another 25-point basis move, and the banks are going to feel it from this 25. You're going to get more banks going under, and then if you have to go another 25. So the original plan that the Fed had to only have the 225 more basis points, including this one, is essentially playing out. So their numbers are ran pretty correctly that banks would start breaking around this time, and then one more would essentially be the nail in the coffin. So if we have to raise again, I think that could potentially cause a huge fallout and crash, because it's already bad. We're going to see what's going to happen over this next week or the weekend. We had SVB, then it was Credit Suisse last weekend. What bank will it be this weekend? And then we'll have to see again full weekend. I'm doing this on a Saturday morning, so really just depends on how this all plays out. But it could get again extremely nasty, and again we're walking on eggshells. So if that core again comes in higher, it's sticky, it's going to be a problem, as we'll have to increase at least another 25. And then again, like Powell stated, we're going to essentially go every monetary policy kind of just going off of what is essentially the scene of the situation at the time, right? We still got a long time before the next one, but if things start going under really fast, which is a strong possibility, then that could lead to some major problems. So, and then as you can see here, I do this every week. I look at the expected move. SPX is way down, still higher than average. So, I mean, last week they just priced in so much, it was ridiculous. They priced in 121 points on SPX, but that's way down. Again, the average again is roughly around 70 points. So that's where we're trying to aim back towards. Again, still a little bit inflated, but if something big happens this week, these are the kind of weeks you can actually capitalize on options. If something does happen in drops in the news and there's a huge move on SPX, then you can capitalize on weeks like this because it's kind of like post big events. So during those, when those events happen, they price in so much that you can't make anything off of it. So Tesla's still very high because of the last movement it had on the last earnings. BA is still very high. JPM is still very high, as it's normally around 3. BA is normally around like 4 or 5, I believe. And then NVIDIA is still very high after its monster rip over the past couple of weeks and continued to rip. So that's still very elevated there. But that is pretty much for that. So there's a lot going on. Again, it really is going to be dependent on inflation is still going to be a problem because they want it down to 2%. And if it's not dropping fast enough, that just means we have to potentially keep adding 25-point basis moves until, again, something breaks. And something I talked about and been talking about, the deflationary aspect of the banks failing could be what gives the inflation that is necessary for this thing to turn around and actually get a true pivot, not just trying to accept that, okay, well, pivot's going to come. Because when this anticipation is what's driving the market nuts, is it keeps going up and thinking that we're going to pivot and we don't, because things haven't played out. Things have to play out first, and they just haven't given enough time for them to play out. Market wise, again, the stock market's not the economy, but you have to understand that you need that final move, and you're seeing a lot of panic overseas. You're seeing a lot of panic stateside with the regional banks. Once that actually plays out and things, you get a good fair share number of banks going under, you get your deflationary aspect. Again, that butterfly effect is going to affect everything. Getting money out of circulation, you're going to kill growth, which we're going to see here, right? You're right around the corner. We got earnings, and banks always start out earnings. So be mindful of that these bank earnings might expose a lot, because Q1 has been a nightmare for banks. And then again, understand you're going to see the butterfly effect of that and all these other companies in this Q1 earnings. Again, I think Q2 is going to be, I think, the worst of earnings. And then again, like I said, I think we'll have your fallout crisis and everything around that time. And then an actual pivot from into an actual recovery stage from this whole thing being done, in my opinion. But again, that is take it for what it's worth. So nonetheless, let's look at some technicals here. So again, the market is very undecided. You have Yellen and you have Powell that are not on the same page. So you're getting a lot of whipsaw. And nonetheless, we'll see where we go, right? Like, there's no big events this week. Again, we're kind of just waiting to see what's going to come of the banking crisis. So again, any news over the weekend could change that. But if we do start ripping up, we could potentially go back to that 40-40 mark up on top here. Or again, we are on the midway point after we hit it and started selling off. So I wouldn't be actually surprised if we start the week off back down around the 3,900 and potentially go back to this 3,800 mark. Float around there. If there's more banking news, could start selling off. Or again, we could head up and just play this range. It's a big range. It's not like it's a small range. Again, the market's very undecided and trying to time the pivot. So again, it is holding, but you have to be very careful, because moves like this particular candle right here can happen at any moment, any time of the day. News gets out about some bank or something, this can get pretty nasty very quickly. So again, not really too much to see here. We are still waiting. It's going to be a quieter week. Like I said, I think we're just waiting to see what happens. It's so far projected, as far as what is scheduled, is quiet. But it's not saying that some event can happen and things could get pretty crazy from that point. So the dollar continuing to bounce back and forth, again, with all the injection of the money back in to support the banks. Interesting scenario that's going on there. But if, again, you get a bunch of bank failures, that could change this a lot and start killing off the dollar even more. So we'll see what happens going forward. Again, the dollar isn't a big thing for me anymore, since we had the break that we've been looking for. So not really watching the dollar too much anymore from this point. Bitcoin. Bitcoin is still strong at 27. It needs to break 30K for this thing to really start ripping. Again, the true test of Bitcoin to see if it's actually truly decoupled will be when the banks fail, if this thing holds, or if this thing crashes with everything else. So we'll see how, again, that goes. Again, that's day to day, minute to minute, hour to hour, just really depending to see what happens with everything and how that does play out. But Tesla again had a bit of a rip. It had some good news with Moody upgrading it from junk, so it had some good news. This way, we got this pop here, but again, not enough to hold. There's a lot of people still don't want to be really risk on right now, just because of what's going on with the banks and the uncertainty there. So we'll watch Tesla, but again, support. There's pretty strong support here around the 69 mark. Again, a really hard ceiling up here around the 210 mark. So you got to watch out for that. But we'll see. Again, the market may Tesla just may not chop here. Again, I have to understand you're getting into earnings mode coming around the corner for April. So Tesla typically follows the banks like a week or two after the banks. So if the banks are around the 15th, look for around the 20th. So towards the end of April, you'll probably see Tesla earnings, and then should see where it goes from there. Nvidia. So watching this one again, the Chat GPT has really been driving and pushing this. The whole AI aspect of everything has really been holding this up strong. So it's going to take a big catastrophic event like a bank crisis for this thing to actually collapse, right? We need a total market collapse for this thing to really come down. It's still very strong. Again, not something I wouldn't be buying up there. Again, this is not financial advice, but you need to let this thing come down. Again, it's got some huge gaps. It needs to fill one here, and then this huge extension that needs to be corrected at least 50%. So you're at least looking at a 177 mark. Now that this thing needs to correct, it's better just to wait and let it happen. Look at some other things until that does process. Then we have BA. And so BA is a big one. Again, this one's continuing to chop in between supports here. I think this is going to be a choppy drop. Nonetheless, got some really bad news about, I guess, some access rights here were expired for like over 6 months or something like that. And nobody actually knew about that, I guess, or whatever the case was. But again, this is one of those ones that are pretty much too big to fail, and like personally backed by the Fed, so it's a good value play to kind of really watch. But nonetheless, it's got some strong support. It still needs to kind of correct this extended move here, I think. So you're still looking roughly around at least a 153 pullback. But you just have to kind of wait and see that plays out. Again, if we get like huge selling pressure, any kind of crash on the index, it doesn't really matter at that point. So these supports will just straight be buttered through. Nonetheless, everything will sell at one time. So JPM, this thing is finally starting to break down. It's really it's not a smooth break. It's been very, very strong. So we'll see, especially with a huge influx of money. It's hard for this thing, unless, again, like I said, the crisis plays out, then that's a different scenario. But still looking for this thing to at least retrace down on the 117. Again, we'll see how everything plays out. But again, I could potentially even see the 102 mark, but we'll see what happens from there. Again, you got a solid ceiling here at the 142. Kind of broken this support roughly around the 129, retested it and sold off, but it's just kind of slowly dripping off. Goldman Sachs, again, corrected. I talked about that. I want to see that in the other stocks. There's a huge move. That's going to be corrected. Essentially, you can take this chunk out from here, and that would be the correction you're waiting for. So, again, you want it to be stronger. So this would be a good case for bulls that you would want higher lows. This is a more natural higher low for this thing to build up and start pushing up, as opposed to just straight up and think that's what's going to work. It's not. It will be corrected at some point like this. It just depends. And lately they've been sticking a lot more than normal. So BAC, I want to see what happens with this, but this is continuing to sell off pretty heavy. Again, they got earnings scheduled for the 18th, so roughly around when all the banks are. Last time they scheduled banks, it was A lot of them on Friday and a lot of them on Monday. So they try to take whatever they were anticipating into the weekend, like we've noticed with the news with the banks. I think this earnings cycle will be the same way. They'll try to release bank earnings on a Friday, take whatever information that happens into the weekend. So they do half the banks on Friday, half the banks on Monday. So if they need to make any adjustments, policy changes, they can do that before the next set of um, earnings come out for the banks. So just be mindful. That's the way. That's why a lot of these earnings aren't scheduled, because they're trying to make adjustments so that way they can try to control the scenario in which things happen. So if there's something really bad happening, they can control the panic. So you have to understand this is the way the adjustments are for the earnings statements, as they try to make sure that everything is adjusted. And that's why they kind of put Netflix and Tesla out front with the earnings, so that the way they can kind of see what could potentially happen with the bigger with big tech. And then if Tesla does really bad, that's just like anticipating, well, then Apple and Amazon could really be really bad too. So they use that as a gauge, in my opinion, and something I've seen throughout the years is they've adjusted the schedule based on the current market environment, and then go from there. They try to get a taste of that industry, and then kind of make adjustments from there. So with that being said, that's pretty much what I got. These videos have been getting long just because of the bank crisis. So nonetheless, if you made this far, I do appreciate you. Go ahead and drop a thumbs up. And until next time, I'll see you guys later.